Good morning, online students. Give me 2 minutes. I'll just set up the class and I'll get back. Just give me 2 minutes, okay? Just take the- I need to log in by directly signing from here. Then I'll make myself the host of it. So now I have to do is I have to give the name with which I have joined in here.
In a classes.
A&M class, right?
Yeah.
I will make him the host. Now, A&M is the host. What do I do? I'll just stop the camera here. And I should Am I audible to you? Wait, somebody has messaged. Audible, is it? Audible? Audible, right? Excellent. So can I start off? Perfect. Online students, am I audible to all of you? Online students, am I audible to all of you? Please confirm once again. Okay. Okay, let me just. Kirtan, I need one more help. How do I write? I mean, okay, just click on draw and we can write, and then if I want to go to the next page, I can just go like that, is it? Or I can just press page down. Okay, okay, okay. Zoom in, zoom out, is it? Okay, very nice. If I have any doubts and how to rub, this is the eraser, is it?
Yeah.
Okay, perfect. So I'll just have to take the.
You can change color by taking.
Okay, that's okay. That I'll learn it. Where is the telegram that I opened? It's here, is it? Okay, so here I've got the RTP. Right.
So just close here and open it. Just
Download. Now I'll do what? Show in folder, is it? Yeah, right? Okay. Okay. Now I can zoom it, is it?
I'll just use mouse for on.
Yeah. I can keep switching between the pages, right?
Oh, yeah. Like two tabs you are can shift.
Yeah. Yeah. So now this is I just zoom it like this here. Okay, and parallelly I can draw here or I can write here. Correct? So I just have to move like this from here. Perfect. Perfect. If I have any doubts, I'll call you. Okay.
I'll be here.
Okay. Okay. All right. Good morning, everyone.
Good morning, sir.
First of all, apologies for the delay. My train got delayed. I was just beyond my control. Now I am here. From now onwards till the end of today's day, we will have the maximum session that is possible from my side, and I'll make sure that all of you get the best out of this. Okay. Now, why are we here today? FM marathon. Okay. So here the objective is do maximum number of problems of all the chapters, and so that we can revise the entire FM in one single day. For that, I'm going to cover for you RTP and MTP. And when I do this coverage, I will not only be covering the RTP, MTP, it will be done from an examination perspective. So when I say examination perspective, my focus will be on how you present the answers in the exam. Point number one. Focus will be on how much concept you are familiar with, and I will be giving the logic and you will be solving the problem. So we'll be parallelly doing problem with logic. So exam point of view, as far as FM is concerned, to score the best marks, there are mainly two areas. Area number one, conceptual clarity. You should know the logic. Why am I doing this? Everybody clear? Point number two, presentation in the examination. According to me, presentation is very, very crucial. If you can present professionally, then you have a very good chance of scoring excellent marks in the exam, because the valuer will first look at how you present your answers. If it is professional, he will be more keen on reading your answer paper and he will be more glued to it. When I say presentation, I am not talking about neat handwriting. No, I am talking about legible handwriting with a professional presentation. So friends, in my session today, from morning till evening, we will follow only one presentation style. Everybody clear? So I'll start with that because we are tracking problems. So we need to have a presentation methodology in place. This method will have 3 steps. Step number 1 would be, 1 minute, basic data. Can you see the screen? No? Okay, okay. All right. I'm new to this setup here, friends. I have different setups in different places, so a little bit time it will take for me to adjust. Perfect. Okay. So, all right, friends. Step number 1 will be basic data. Step number 2 will be analysis, and step number 3 will be conclusion. Everyone repeat with me. What is step number 1? Step number 2? Step number 3? What we do in basic data is very simple. When you read the question, now for example, now this is an RTP question, okay? The moment you read this question, look at the size of this question. Okay, hold on, I think it's starting here. You have a lot of data here. Then you come down, you have more data over here. Then you come down, you have even more data over here. Do you think just by reading this question, you will understand what is happening over here? R more LLP, this, that, etc. So what I have done in this question, if you see on the board, is that I have highlighted certain areas in yellow. Am I right? What are those yellow points? If you read, you will understand that ideally line 1, 2, 3, 4, 5, 6. Only some story is written which is not at all relevant from the exam point of view. It's only to give you a background. Then you see that I have highlighted the numbers. For example, what is the first number I have highlighted over here? 5 crore. That number is important. What is the second thing that you see over here? 1 year. So the life of this thing is how many years? 1. Like that, in basic data, we will write down all the numbers one by one. Why we do that is because when you read, you will not understand. Understanding the question is extremely important, my dear friends. It's extremely important. Only if you understand the question, you will be able to get the right answer. In fact, I'm training from the last 14 years, friends. In the last 14 years, one thing what I have understood is many a times students get less marks, not because they don't know the answer. They get less marks because they do not understand the question. I can give you a very simple proof right away now. Okay. For this proof, I will need 2 things from your side. 2 rules that you have to follow from my side. Rule number 1, you're not supposed to ask your neighbor or talk to your person. You have to do it yourself. Rule number 2, don't use a calculator. Can I give you a task now? Are you all ready? Okay. Think of any number in your mind between 1 to 9. Don't tell your neighbor. Keep it with yourself. Okay. Thought of a number. Multiply that number with 3. You got an answer? Plus 3. Got an answer? Again multiply with 3. Searching for the calculator, is it? You got a 2-digit number in your mind. Whatever is a 2-digit number, add it together. Don't talk to your neighbor. Okay? Did you get an answer? Whatever answer you've got, plus 2. Now you got another answer. Whatever answer you have got, convert that answer into an alphabet. So if the answer is 1, alphabet will be A. Answer is 2, alphabet will be B. Like that, whatever, and if your answer is greater than 26, forget it. You got an alphabet? If you got an alphabet, think of any animal that you know with that alphabet. If you know, otherwise it's okay. You got an animal? Okay. Whichever animal you have got with the last letter of the animal. So suppose you got dog as the animal, last letter is what? G. Like that, whatever animal you got, last letter of the animal, with that you think of any fruit that you know. If you know, otherwise leave it. All right. Now let me check how many of you understood the question. Okay. How many of you are thinking of a kangaroo eating an orange? Raise your hands up. How many of you got the answer as 11? Raise your hands up. These many people understood the question. Remaining people, you have to work on the question understanding skills. Put your hands down. Now, shall we get back to the class? Again, friends, let me go back to the same rule number 1. What is rule number 1? Okay. We don't have to understand the logic of this. Let's get back to the class now, friends. Focus. What is rule number 1 and the most important rule? When you write the basic data, why are you writing the basic data? It is to understand the question. Will you get marks for this? No. You don't need marks. If you understand, only then your step 2 will become correct. Step 3 will become correct. Your marks lies in step number 2 and it lies in step number 3. Everybody clear with this part? So for example, in the basic data, for example, you have earnings per share as 10 rupees. Okay. Then you are getting the number of shares. Over here, you are getting the number of shares as 100 shares. Okay. This is a basic data. Now tell me, the moment you see EPS is turning out to be 10, number of shares is 100, does your brain tell you something? What does your brain tell you? It doesn't tell you anything. It should tell something. Number of shares is there, EPS is there. What does your brain tell you? Total earnings. Your brain should be able to come out with that. That earnings becomes your analysis. So earnings is equal to 10 rupees into 100. That is equal to 1000. Based on this analysis, only you can apply the concept. Are you getting my point? So most of the time, the requirement of the question, if you want to really understand the requirement, you need to play with the analysis part. But to reach the analysis part, what is point number 1 that you are supposed to do? Basic data. Are you all clear with this part? So in my class, from now till the end of today's day, we will be only working out problems, and all the questions we will work out using one presentation, that is basic data, analysis, conclusion. Everybody clear? This method, one other advantage is that normally students come and tell me, when I read the question, I don't understand which chapter the question has come from. Do you feel like that sometimes? Okay. Now onwards, remember one thing, FM is actually one chapter. Okay. For your convenience, they have broken it up into working capital, leverage, this, that, etc. So don't think which chapter it is from. Think it is FM. Write the basic data, automatically you do the analysis. Then if you read the requirement, you will be able to understand the requirement much better, and there are a very high chance you will be able to get the right answer also. Okay, friends. Now, today we are going to do RTP and MTP. So when I come to this RTP, friends, one important point I want to tell you. Overall, this RTP is a very, very good RTP. Okay. Question number 1 is an MCQ, but it is an atom bomb question. Beautiful question. I don't want to start directly with a dangerous question and demoralize you. We will start with easy, take it forward, and then we will go to the advanced level questions once you are adjusted with my presentation style. Everybody clear? So I'll tell you question number 1 from this exam point of view is one of the best questions on working capital management. 1 and question number 7. 7 is even better than question number 1. Okay. So 7 and 1 are two working capital management questions which actually covers almost all the areas of working capital. It covers cost sheet, it covers raw material management, debtor management, creditor management, cash management, everything. Okay. So mark these two questions are very good, important questions from the examination point of view. Everybody clear? And remaining questions are all, that is when we talk about question number 2, question number 3, etc. They are all good, but they are all manageable. Manageable compared to question number 1 and question number 7. Everybody clear with this part? So shall we now start off, and I'll take a different order of the problem so that we all follow it together and understand it together, and then we will go to the advanced level problems one by one. Shall we begin, friends? Okay. Let's start with question number 4, leverages. Exam point of view also, friends, always start with leverages. It's an easy question. So there is a very, very high probability that you will get it correct. And one question you get correct, that confidence level is very, very important for us to go to the next part. Now tell me, when you talk about leverages, there are mainly 3 types of leverage. Everyone tell me, what are the 3 types of leverage that you have? Operating leverage and combined leverage. Okay. Now tell me, operating leverage, how do you find out? Contribution divided by EBIT. How do you find out financial leverage? EBT. How do you find out the combined leverage? EBT. Okay. Wait, let me take a blank page and let me do it again. Hold on. How do I go to the next page here? Okay. I'll just do it this way. Yeah. Okay. So I'll just put it again. So we have learned there are 3 types of leverages. First one is operating. Second one is financial leverage. And what is the last one? Combined leverage. So when I speak about operating, you again, please tell me the formula. It will be contribution divided by EBIT. What is the second one? EBIT divided by, and the last one is going to be contribution divided by. There is one more formula for operating leverage. What is the other one? percentage change in EBIT divided by percentage change in sales. Whether you take percentage change in sales or contribution, you'll get the same answer. I prefer calling it contribution because it's easy. It's just reversing the formula. That's all. Sales also exactly the same thing. Here, what will be the formula then? Percentage change in EBT divided by percentage change in EBIT. What about the last one? Percentage change in EBT, or you call it as EPS, divided by percentage change in contribution or sales, because whatever is the percentage change in sales, same will be the percentage change in contribution also. Everybody clear so far? All right. So if you are clear with this, now let us take this problem and let us do this question together. So first I told you, when we are presenting an answer, we go by 3 steps. What are the 3 steps? Everyone tell me. Basic data, analysis, conclusion. Here there are two, here you are having 2 companies. What is the name of the first company? A. Second company. So we'll start with company A. So write down working note number 1, basic data of company A. Online students, I believe even you are comfortable, right? Kirtan, if I want to scroll the chat, anything I can do? This mouse is there here.
Virus.
So I don't know. All right. Fine. Did you write down basic data for company A? So now what we will do is, whatever numbers you see in the question, we will copy down. Let it take extra time. You will take maximum 5 minutes per question, friends. But that is the best investment. Do not compromise on that. Okay. So point number A, what have they told over here? Variable cost. Write down point number A, variable cost. Variable cost. Everyone tell me how much is a variable cost? 88,000. Point number B, fixed cost. Fixed cost. Everyone tell me how much is a fixed cost? Okay, so we have variable cost, we are having fixed cost. Then what have they told over here? Write down point number C, interest. How much is the interest expense? 14,000. Then you write down financial leverage. Financial leverage. How much is the financial leverage? 5:1. What is the last thing given over there? Income tax is what they have given. So write down income tax. Income tax. Yes, tell me. So how much is the income tax rate that you get over here? Do you get the answer as 30%? All right. So we have written the basic data. Okay. Now we have understood the question. From this basic data, we are supposed to find out the hidden information. Now tell me, when you read through this data, all right, one of the things given over here is financial leverage. What is the formula for financial leverage? So for that, I need EBIT and I need EBT. Have they given EBIT in the question? How do you find out EBIT? Contribution minus fixed cost. For that, have they given the contribution? No, but they have given you the variable cost and they have given you but they have not provided you with the sales. If they have not given you with the sales, for time being, can we assume that sales is going to be X? So I'll put the format of an income statement. Okay. So everyone tell me, how do you put a format of an income statement? First point will be sales minus variable cost, contribution minus fixed cost will give you EBIT, minus interest will give you EBT, reduce tax, you will get earnings after tax. Everybody clear? So let me take the sales as X. How much is the variable cost? Come on, tell me now. See, you are able to correlate better because you wrote down that number once from your hands. It has a better impression on your mind. So now tell me, how much is the contribution that you get over here? Okay, now tell me, how much is the fixed cost? 26,500. So what will be your EBIT? X minus 1 lakh 14. Okay, 1,14,500 is it? Okay, 1,14,500. How much is the interest they have told over here? 14,000. So what will be your EBT now? X minus 1,05,000. Then you have tax and you have EAT. I think we'll do that later. It's not required to be done now. It will simply complicate things. We already have the formula for financial leverage. What is the formula for financial leverage? Everyone tell me. So it will be X minus 1,14,500 divided by X minus 1,28,500 should be equal to 5 or 5 divided by 1. Once you solve this, will you not get the value of X? Come on, do it on your own from here. Write down and find out the answer. That's not quite. Just chat. I need to check. All right. Okay. Right.
Because you have to students are just you are able to connect everything.
Is it?
It's fine.
1 lakh? 1,32,000. Everybody is getting the same answer? Perfect. Online students, did you also get the answer as 1,32,000? So the value of X will be 1,32,000. Okay. Once you get X as 1,32,000, can I prepare an income statement for company A now? Write down the next working note. Income statement for company A. Do it yourself neatly, okay, and try writing little fast if possible. But for presentation, no compromise on quality, okay? Perfect. The earnings after tax will turn out to be 2,450. Sales you took it as 1,32,000, 88,000, 44,000, 26,500, 17,500, 14,000, 3,500, 1,050, 2,450. All right. All right, friends. Are you all done writing this in your books now? So we are done with company A. Can I go to company B right now? Now you write down the next working note, basic data for company B. Basic data for company B. Okay, come on, friends. Now do it one by one. What is point number A that you will write down over there? Variable cost. Write down. Variable cost. How much is the variable cost? Everyone tell me. 50% of sales. Point number B, what have they given over here? Interest. How much is the interest they have given over here? 11,000. Then they have given you the margin of safety. Friends, what is the formula for margin of safety? 1 divided by degree of operating leverage, or what is operating leverage? Contribution divided by EBIT. So this will be what? EBIT divided by contribution. Okay. So when you write down margin of safety, that time in bracket itself you give the formula. So that way you will be able to correlate better. Understood? So immediately give in bracket the formula EBIT by contribution is equal to 0.25. Okay. Right. Now, what is next they have given over there? Income tax rate is given as how much? 30%. 30%. And finally, they have given you the EBIT. How much is the EBIT they have given you over here? 14,000. Perfect. So friends, we have written down the basic data again. Now we have to again go into what? Analysis of company B. So everyone interact with me from this data. What are the hidden information that you can find out now? Contribution. How do you find out the contribution? EBIT is given and margin of safety is given. So from this we can find out the contribution. Am I right? Friends, I'll just show you how we do it. We'll write down the next working note heading, analysis of company B. Analysis of company B. Analysis of company B. In that, what we will do is we will write down Roman number 1. We will write down contribution. There we will write down the formula first. Margin of safety is equal to, what was it? EBIT divided by contribution. Or in other words, 0.25 is equal to, how much is the EBIT that we got over here? 14,000, is it? Okay, 14,000 divided by contribution. Like this, you are supposed to find out the contribution. So I think 56,000 will be the answer. $56,000. Everybody clear so far? Now tell me, once you get the contribution, what else can you find out over here? You can find out the sale value. How is that? They have told variable cost is how much percentage of sales? If variable cost is 50%, contribution also will be 50% of sales. Everybody clear? So write down Roman number 2. Roman number 2, sales. There you can write down, okay, if variable cost is 50% of sales, contribution, sorry, not contribution, sales, I think I wrote it correctly, yes. Contribution will also be 50% of sales. All right. Yes. So once you write down this, then I'll go to the next part, and here I'll write down below this. Sales will be equal to 56,000 divided by what? 0.5. So do you get the answer as 1,12,000? Once you get the sales, now you can do the remaining part yourself. Am I right? So now you write down Roman number 3, income statement of company B. Income statement of company B. I believe you are preparing the income statement yourself, or are you waiting for me to dictate? Come on, do it. Done already, is it? Did you get 1,12,000 as a sales? Variable cost is how much? 56,000. Contribution, fixed cost, EBIT, interest. So EBT 3,000, tax 900, and EAT will be 2,100. Everybody clear so far? Perfect. So we are done with this part. Okay, leverage part. Now we will give a heading called as conclusion. Okay, let's read the requirement. What are the requirements that they actually have over here? Oh, they are just asking you to prepare the income statement, is it? Okay, so then what you should do is you should give a heading called as income statement of company A. Tell me, in which working note have you found out the income statement of company A? One or two? It cannot be one. One was basic data, correct? After that, in two, right? So whichever working note you found out, just give the working note reference over here. Working note number 2. Same way, income statement of company B was which working note? Whatever working note you have got, maybe if you've done it 1, 2, 3, or if you've done Roman number 1, Roman number 3. If it is working note 4, put it as working note 4, Roman number 3. This is what we call it as conclusion. Okay. Everybody clear with this part? So friends, once you write down like this, understand from the valuer's point of view. As a valuer, when he reads through the answer, he will see the basic data. So he does not have to read the question. Directly in your answer book only the data is available. He sees the analysis. Then he sees the conclusion. Conclusion correctly have given the working note reference. If you write like this, question carries 5 marks, you will get full 5 out of 5. And valuer from the next question onwards, he will do a reverse working. What is reverse working? He will start with the conclusion. He will see working note reference is given. He just has to go and check working note 2 and working note 4, Roman number 3. He gets the answer. You are saving his time. That professional presentation will help you a lot in the examination, friends. Are you all clear with this part? Can we go to the next question now? Okay, let's go to the next question. Question number 5 is a question on capital budgeting. Now, friends, new syllabus, they only have capital budgeting. Old syllabus, they had many other topics like sensitivity analysis was there, certainty equivalent factor, and many such areas were there. Everything has been removed. Now it is only capital budgeting. So in the exam, you will have a sure shot question from capital budgeting. Capital budgeting also mainly 2 types. One is normal capital budgeting. Second one is replacement decisions. What do you mean by replacement decision? Old versus new. In your RTP and MTP, they have given questions only on replacement decisions. All right. Now, shall we do this problem together? Tell me, question number 5, what will be working note number 1? Basic data. Everyone write down working note number 1, basic data. Online students, I believe you are all comfortable. If you have any doubts, just message here. Okay, I'm reading all your chats. Perfect. Basic data. Now, friends, we'll read through the question. Focus on the areas that I have highlighted over here. Okay. HMR is considering replacing an old machine with a fully automatic new machine. So you can think of a bike. You have an old bike, selling the bike, and you're buying a new bike. Okay. Old machine had been fully depreciated for tax purpose. That message, what does that imply to you? If it is fully depreciated means, will there be any salvage value remaining for that? So income tax point of view, salvage value of the old machine is going to be, write down point number A. Point number A, salvage value from income tax perspective, from salvage value from income tax point of view, will be 0. Salvage value from income tax point of view will be 0. Everybody clear with this part? Okay. Next one. But it has got a book value of how much over here, friends? So write down. Next point, book value. Book value is how much? 2,50,000. Everybody clear with this part? The machine has begun causing problems with breakdowns. It cannot fetch more than 40,000 if sold in the market at the present point. Wait, I think I used the wrong word earlier. Did I use the word salvage value earlier? I should use the word WDV. Closing WDV from income tax point of view is 0, not salvage value. Please correct that word, friends. It is closing WDV. Okay. Closing WDV is turning out to be 0. Okay. Now they are saying it cannot fetch a salvage value of more than how much? 40. So write down present salvage value. That is how much? 40,000. Then they are saying it will have no realizable value after 10. So write down the next point, salvage value after 10 years of old machine. Salvage value after 10 years for the old machine. That is going to be how much? 0. Okay. Next. Here it is. Perfect. Thank you so much. All right. Did you get the salvage value as 0 over here, friends? Okay. After 10 years. Now, company has been offered 1,50,000 for the old machine as a trade-in on the new machine, which is having a price of how much over here? So, friends, that means if I buy the new bike, I will get 1,50,000 for the old bike. Correct? So, net, how much is my extra investment coming in the new vehicle? 4,50,000. So, write down the next point. Write down the next point. Extra additional investment in the new machine. Additional investment in the new machine. Additional investment in the new machine. Right, friends. So what is the answer you get? 4,50,000. Okay. Now, the life of the new machine is how many years? Write down life of the new machine 10 years. Life of the new machine is 10 years. 10 years. Okay. Now, company has been offered how much value for the old machine? Okay. Okay. I think that's already discussed, right? Sorry. Salvage value is how much given over here? 70, 35,000. Can you write down 35,000 over there now? 35,000. 35,000. Further, the company follows WDV method of depreciation at the rate of how much percentage? So write down, next point, company follows WDV method of depreciation. But for tax purpose, they are using what method? SLM. So write down the next point. Company uses. Wait, what was the earlier point that you wrote down? Method of depreciation. You wrote down that point, right? Put at the rate of 10% also. At the rate of 10%. Next point you write down. SLM method is used for tax purpose. SLM method is used for tax purpose. SLM method is used for tax purpose. Okay. Next one they have told working capital of how much will be required over here? 50,000. Write down working capital requirement 50,000. 50,000. Okay. It will be released at the end of which year? That write down as a next point. Next point you write down 50,000 will be released. 50,000 will be released at the end of 10th year. This data is very important if you want to crack capital budgeting. Okay. Then they have told given below are the sales and cost of both old machine and new machine. You don't need to copy down this now. Already we have copied down a lot of data. This table is already available. Okay. Now from the above, analyze whether old machine should be replaced or not. This is the question. Okay. So now friends, what I will do is I told you we will go by 3 steps. What are the 3 steps? Everyone tell me. Analysis, conclusion. We have written the basic data. I'll give you 1 minute. Read through the basic data and think what are the hidden information you can find out from the basic data. HP, yes, we will provide the recorded session also. Okay, once it's over, we'll upload it and share it with you. Okay, but preferably finish it now itself. Don't go for recorded. In 1 day, it will get over. Otherwise, it will keep on postponing and you will not end up doing it. Okay. Come on, read, understand, think what are the hidden information. Done? Shall we discuss now together? One by one. First, they have told old machine has been fully depreciated for tax purpose. So, what is the salvage value as per income tax? 0. Is that data relevant or not relevant? Why is it relevant? Friends, at what price are you selling the old machine? When you sell for 1,50,000, your actually WDV is how much? So what is 1,50,000 minus 0? What is that 1,50,000? Or in your income tax language, we call it as short-term capital gains. On that capital gain, you have to pay income tax. How much is the tax rate they have told over here? Have they told 10%? Oh, there is some more data here, is it? Tax rate is how much percentage?
30%.
So, friends, you sell for 1,50,000, your WDV is 0, gain is 1,50,000, on that 30% is equal to how much? You have to pay this tax of 45,000. Is this the relevant data, yes or no? If you forget this, your initial investment will go wrong. Because what did we take now? 6 lakhs was the cost of the new machine. Minus 1,50,000 of the old machine. Did we get 4,50,000? 4,50,000 and we have to pay this tax also. So my initial outlay will become 4,50,000 plus 45,000. So write down working note number 2, analysis. Working note number 2, analysis. Roman number 1, tax impact on old machine. Tax impact on old machine. So here what you will write down? You will write down that WDV is equal to 0. Sale value 1,50,000. So your short-term capital gain will be 1,50,000. On the tax will be how much? 45,000. Inflow or outflow? This is going to be your outflow. Friends, my writing is going in a 45-degree. I hope that's okay and readable to all of you. Now it's better. Yes, friends. Are you all clear with this part now? Okay, so we are done with part 1. Second thing what they have told is here the price is 6 lakhs. Okay, life is how many years? Okay, hold on, we'll go one by one. Book value is 2,50,000. Relevant or not relevant? Book value is not at all relevant because this book value, will you use it anywhere now? Book value was 2,50,000, agreed. That is in accounting purpose. Accounting purpose is just a closing balance, but you are selling it for how much value? 1,50,000. 1,50,000 is the relevant cost. Everyone clear? Then they have told over here 40,000 is sold at present. Is that relevant or not relevant now? Not relevant because I am exchanging it with a new bike. Okay, if I don't exchange, I will get 40. But now I am anyways exchanging. So I have considered 1,50,000. So 40,000 is not relevant. Everybody clear with this part? Now, other bike they have told 6 lakhs is the price. Life is 10 years. Salvage value 35,000. Under Income Tax Act, your depreciation will be on what method? From this, can I find out what will be the depreciation under straight line method? So everyone write down Roman number 2. Everyone write down Roman number 2. Depreciation of new machine under income tax purpose. So here it is going to be 6 lakhs minus 35,000 divided by how many years? 10 years. What is the answer you get over here?
56,500.
56,500. So once you get this answer, at the end of the 10th year, you will be getting a salvage value of how much over there, friends? 35,000 is what you will get over there. My question is, in the beginning, we sold for 1,50,000, our WDV was 0. So we made a capital gain of 1,50,000. Like that. Can we find out the gain or loss at the end of the 10th year now? I'll write down Roman number 3, STCG or STCL at the end of how many years? 10 years. At the end of 10 years. So friends, tell me, what will be the closing WDV at the end of 10 years? What is the depreciation you're charging every year? So it will be 6 lakhs minus 56,500 into 10. Yes or no? So tell me what will be your closing WDV? Is it 35,000? Now tell me what is going to be your salvage value at the end of the 10th year? Is it 35,000? Are you making a gain or are you making a loss? No gain, no loss. Will you have any tax impact over here? No. So what will be your closing cash inflow? Closing cash inflow will be nothing but 35,000 only. So the formula for this would be salvage value plus whatever gain that you have made. But here, since gain is 0, you get the entire 35,000 as your closing cash flow. Please write down this in your books now. Sure, Srihari. In that, is that capital gain thing something new in the investment decision chapter? Okay, wait. I think me using capital gain, is that term creating confusion for all of you? You don't have to use the word capital gain. You can use gain or loss is also enough. But if you have learned income tax also, over there you have learned the concept of block of assets. Am I right? As per the block of assets, always depreciated assets will have a short-term capital gain or short-term capital loss only. Okay. But normally in FM, they don't use that terminology. They just call it as gain or loss. But I thought of connecting both. That's all. All right, friends. Are you all done writing this in your books now? Okay. So we get this. Now my next question to you. In this question, they have told that company follows WDV method of depreciation. Is that WDV method relevant or not relevant? It is not relevant. Why is it not relevant? You are doing cash flows based on only income tax purpose. Depreciation is a cash item or a non-cash item? Okay. In financial management, we always focus only on the cash flows. We don't worry about profit, depreciation, etc. Okay. Accounting depreciation not relevant. Only what is relevant over here, income tax. Because on that you have to actually pay income tax, which is a cash item. Everybody clear with this part? Okay. So you can write down the next Roman number. Okay. So that we are not having any confusion in our mind. Write down Roman number 4. There you can write down WDV method is only for accounting purpose. It has no relevance in financial management. All right, friends. Are you all done writing this in your books now? Yes. So we are done with this part also. This is how you should crack a question. Basic data, understand line by line, clear it up, and then we go to the next one. So friends, until where we have covered, this part is clear. This part is clear. We are clear till here. I think even this part is clear now, right? Okay. Now, working capital requirement is how much have they told over here, friends? Now, that will also be a part of the initial cash flow. Am I right? 50,000. And it will be released at the end of which year? 10th year. I think that part is clear to all of you, correct? Let me go down. Okay, now they have given you one more table over here. Go through this table and tell me what do you understand from this table, or what are the hidden information you can find out from this table. Now tell me, have they given you the annual output? Okay. Have they given you the selling price? So when you have annual output and selling price, from this, what can you find out? Total sales. They have given you the annual operating hours, and they have given you the labor cost per hour. From this, what can you find out? Total labor cost. They have given you material cost per unit. From this, what can you find out? Total material cost. So we can get total sale value, total material cost, total labor cost also you will get, and then what will you get? Indirect cost is directly given to you over here. So ideally, from this table, can we prepare our income statement? So we can do it for an old machine, then we can do it for the new machine, and then we take the incremental sales, incremental material cost, incremental labor cost, etc. Everybody clear with this part? Okay, so please write down in the next Roman number in your analysis, that is Roman number 5. You can just write down incremental in between cash flows. Incremental in between cash flows. I'll take a fresh page and I'll do it here. Okay, I'll do it here. Okay. Particulars. You are having machine A, then you have machine B. I'll put incremental. Point number A, we will put it as what? Sale value. Point number B will be what, friends? Material cost. Point number C will be what? Labor cost. What else have they told over here? Indirect cost. Put this format and then I will show you how to go ahead from here. Friend, one more thing will come over here, that is depreciation. Depreciation for A is becoming 0. That asset is not there anymore. B, I believe we already got the answer as 56,500. Am I right? Okay. So now tell me, what will be a sale value? How much is 60,000 into 18? Can you tell me? 10 lakh 80,000. What about your material cost? 3 lakhs. What about your labor cost? Let's check it. 2,800 into 50. Do you get the answer as 1,40,000? Indirect cost is also given over here as how much? 1 lakh. So you get EBIT from this, right? Here there is no interest, so I'll directly give it as EBT, earnings before tax. Same way for the new machine, the numbers will be 14 lakh, 40,000. Your material cost will be 4 lakhs. Your labor cost will be how much? 2,10,000. Indirect cost will be how much? 1,75,000. Okay. Then you put EBT. Tax. After tax, what will you get? Earnings after tax. And then what will you do? Add back depreciation. So you get the cash flow after tax. Tell me, friends, what is the answer you get over there? 3 lakh? No, no. Tell me the final difference figure over here. Do you get the answer as 97,450? Wait, some of you are still writing. Let them finish. All right, friends. Everybody got the answer as 97,450 now? Perfect. So once you get this as the additional cash flow, we'll go to the next part. From the above information, analyze whether the old machine should be replaced or not if the opportunity cost of capital is 10%. So friends, we need to now summarize and find out what are going to be your initial cash flow, what is going to be your in-between cash flow, and what will be your terminal cash flow. So we'll write down the next working note heading, initial cash flow. Now tell me what and all will come in the initial cash flow. Additional cost of New machine. How much is the additional cost of new machine? Everyone tell me. 4,50,000. Point number B is going to be what? Tax on old machine. How much was the tax on old machine? Was it 45,000? Point number C is going to be what? Working capital. 50,000. So what is the total that you get over here? Do you get the answer as 5,45,000? Then I will write down in between cash flow. In between cash flow. I think this we just found out now. How much is the in between cash flow? 97,450. Next one is what? Terminal cash flow. So how much is going to be your terminal cash flow here now? I think we found out that earlier, right? One is working capital and salvage value. Working capital was how much? 50,000. How much was the salvage value that we found out? 35,000. So do you get the total as 85,000 over there? Okay. So once you do this, you can write down the final working note heading. What will be the final working note heading? NPV. You do this yourself. I'll give you 5 minutes time. So year 0, 5,45,000. Year 1 to 10, 97,450. Year 10, 85,000. 97,450. It will be received every year, right? So year 1 to 10, I have put annuity. Okay, online students, are you able to hear me? I'm not able to. Mouse is not moving. Yeah. All right. Online students, please confirm if you are able to hear me now. Can you hear me? Yes? Okay. Okay, perfect. All right, friends. So what is the answer you all get? Can you please tell me once again? 80? Okay, 86,500 approximately. Okay, 86,500 is the right answer. You get little plus or minus, don't worry. Rounding off, don't worry. Many students keep asking me this question. Should I take 2 decimal, 3 decimal? You will get full marks even if you take 2 or you take 3, unless the question clearly asks you, do it in 3 decimals or 2 decimals. All right. Focus on conceptual clarity. Because if you're conceptually wrong, you will not get marks. Rounding off, you will never lose your marks. Everybody clear? Okay. So did you all get the answer as 86,500? Can I go to the next question now? Let's take the next question. Next question is on dividend decisions. Okay. Now, so this question, as we do all the problems, write down working note number 1. Working note number 1. Basic data. Working note number 1, basic data. Everyone look up. Everyone interact with me. What is the first number that you see over here? What is that 10 lakh? Share capital. What is the second number you see over here? Face value is how much? 10 rupees. Third thing, current market price is how much? 20. Board of directors has the agenda to pay a dividend of how much money, friends? 20. Now here is a twist. Dividend they are paying of how much percentage? 25% dividend is what they are paying. Have they told it is 25% on market price or face value or earnings? Not given. So here actually you can assume it to be 25% of market price. You are correct. You can assume it to be 25% of face value. Then also you are correct. You can assume it to be 25% of EPS also if that is given in the question. Nothing wrong because there are 3 types of dividend formulas: dividend rate, dividend yield, and dividend payout. Your textbook has assumed this to be dividend rate. So we will also do it like this, but in the examination hall, if you take dividend yield, that is with the percentage of market price, your answer is not incorrect. That means your answer is actually correct. Okay. But you have to give an assumption below that. Everybody clear? Next one. They have told the net income will be how much? 5 lakh 20,000. Also plans for a capex, capital expenditure of how much? 7 lakh 50,000. Desired rate of investment. This is nothing but your KE. So first we will write down this in our basic data. Everyone write down working note number 1, basic data. Working note number 1, basic data. Point number A, share capital. Share capital. How much is the share capital? Everyone tell me. 10 lakhs. Point number B, face value. Point number B is what? Face value. So everyone tell me how much is the face value? 10 rupees. Next point, market price. Market price. How much is the market price? Everyone tell me. 20 rupees. Next one. They have told dividend rate. Dividend rate. Tell me, friends, how much is your dividend rate over here? Okay, in bracket, you write down it's assumed to be on face value. It is assumed to be on face value. All right. Yes. Next part. After dividend rate, then I think they have given you the income. That is the earnings. Earnings. Everyone tell me how much is the earnings that you have over here? 5,20,000. 5,20,000. Next part. Company is also having plans for CapEx, capital expenditure. So write down the next one, capital expenditure. Capital expenditure. So everyone tell me how much is the CapEx that they have told over there? Okay, 7,50,000. Next, you write down KE. 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 How much is your KE? Everyone tell me. 15%. Are you all done writing this? Now they're asking you find using Modigliani-Miller approach whether dividend is paid or dividend is not paid. One I will do, one you will do. Okay. So now tell me, friends, which one do you want to take it first? Dividend paid or dividend not paid? Even before that, we should actually write down working note 2 analysis. But I think here we'll do that analysis as a part of the solution itself. Okay. So which one you want to do first? Dividend not paid. Okay. So I'll write down working note number 2, dividend not paid. Okay. All right. Friends, do you know the formula for Modigliani-Miller? What is the formula for Modigliani-Miller? NP0 is equal to P1. That is a new price into N plus. Okay. Either we call it as change in N, delta N, or some books call it as M. Okay. If you want to take it as delta N, we'll take it as delta N. Okay. Minus I plus E whole divided by 1 plus KE. Okay. So now here basically when we have to solve this, we should go by 3 steps. Step number 1, we should first go and calculate our P1 price next year. Then we should go to step number 2 where we are supposed to calculate our M, and only then we are supposed to solve the equation. Everyone repeat with me, what is step number 1? Calculate P1. Step number 2, calculate M, and then you will go for the equation. So now everyone interact with me. What is the formula for P1 that you have learned over here? P0 into 1 plus KE minus D. Okay, this we can play around with this formula, or the logic of this formula I will tell you along with the problem itself now. Okay, so how much is the P0 or price that is given over here today? Is it 20 rupees? So it will be 20 rupees into what is the KE they have given over here? 15% minus D. How much is the dividend that they have given in the question? Okay, dividend not paid, I will take it as 0. So now tell me what is the answer that you get over here? 20 plus 15% will be how much? Do you get the answer as 23 rupees per share? Friends, the logic I will tell you now. Interact with me. What is the price of the share in the last year or current year? It is like today the price is how much? 20. As an investor, your expectation is how much percentage? So if I invest 20 rupees, I should at least get 15 rupees. Sorry, I should at least get 15% return. On 20 rupees, how much is 15%? Everyone tell me. 3 rupees. So if I invest 20, I should get at least 3. What is 20 plus 3? Out of this 23, if the company has given me some dividend, that much I have to reduce because I already got that money in my hand. Everybody clear? Here, is there any dividend? Yes or no? No dividend. So your price after 1 year should be how much percent? How much rupees? 23 rupees. Okay. Now, second step is calculate M, or in your terms, we'll call it as delta N. Okay. I'm getting mixed up with the words delta N. Delta N means what? Additional shares to be issued. How do you work out the additional shares to be issued? Come again? Finding the fund required. Now tell me, how much is the fund required? How will you find out? How much is the investment that is coming over here? Everyone tell me. Okay. Apart from this, do I have to pay any dividend as of now? Dividend payment is 0. Okay. So my total outflow is 7 lakh 50 minus how much is my earnings that is coming over here? 5 lakh 20,000. So how much is my fund shortage over here? 2 lakh. Do you get the answer as 2 lakh 30,000? Correct. 2 lakh 30 is my fund shortage, and I will be issuing shares at P1, that is 23 rupees. So what is 2 lakh 30 divided by 23? So how many shares I'm going to issue now? 10,000 shares. Once I get these two numbers, I just have to go and solve this over here. NP0 will be how many shares are there as of now? 10 lakh rupees. 10 rupees. So right now you're having 1 lakh shares. Okay, I'll just go to the next page. I'll do it. Then you can write it down. So I'll write down NP0 is equal to 1 lakh shares into 20 rupees. That is equal to how much, friends? Do you get the answer as 20 lakhs? Then I will find out P1 into N plus delta N or M. That will turn out to be how much? 23 rupees into, already I have 1 lakh shares, plus I'm going to issue how many more shares over there? 10,000 shares. So what is 23 into 1 lakh 10,000?
25 lakh.
Do you get the answer as 25 lakh 30,000? Perfect. After this, what is the next thing that's coming over there? Okay, so then it will be 25 lakh 30,000 minus the investment of 7 lakh 50 plus the earnings of 5 lakh 20,000 whole divided by 1.15. When you do this, you will get the answer as 20 lakhs. So when I did NP0 also, I got 20 lakhs. P1 also, I got 20 lakhs. This is when we do dividend not paid. Like this, you are supposed to do what now, friends? Dividend paid on your own. Can you please do it yourself? Yes, friends, are you done writing for the second one also? Can you tell me what are the numbers you get? How many of you are still writing? Raise your hands up. Okay, everybody is writing. Please do it. Sorry. If my speed goes up, let me know. Okay, we'll go at a comfortable pace. We'll cover everything with logic. Done? Sorry. Are you able to hear me now, online students? By mistake, I muted myself. Now it's clear, right? Okay. So I was just giving you the summary once again. Here you got 23,404,115. And the NP0 will be again 20 lakhs. And the RHS of the equation also will be 20 lakhs. Hence, proven that whether dividends are paid or dividends are not paid, ultimately you will end up getting the same answer. Everyone clear with this part now? Okay. Anybody still writing? Let them finish, friends. We'll just slow down, let everyone finish. If anyone wants my help, let me know. I just thought of leaving it to you to do it yourself. Okay. Okay, friends, I think all of you are done. Anybody wants my help? No. So, friends, we are done with this one particular question also. Now, I think RTP, we have got this one dangerous question to do. Dangerous question we'll do in the end, friends. Let's cover the comfortable one so you all get a grip and then we'll do. 7 is a beautifulest question. It will take minimum 1 hour for question 7, 1 hour for question 1. So 2 hours will go in those 2 questions alone. So let's cover all the other short questions before that and then we go to that one. Now, friends, we will do a question on capital structure. This is also a bit confusing because of the approaches involved. You are having value of equity, value of debt, etc. Now let's work out this question. So everyone take question number 3, write down working note number 1, basic data. Working note number 1, basic data. Now, friends, yes. Here we'll write down first one, capital employed. How much is a capital employed over here, friends? Tell me. 3 lakhs. Write down 3 lakhs. Capital employed is 3 lakhs. Point number B, they have given you the EBIT. EBIT. How much is the EBIT they have given you over here? 45,000. Then they have given you the KE. How much is the KE they have given you over here? 12.5%. 12.5%. Okay. Friends, here I'll give you a few formulas now, and then I will give you a concept on why we use these formulas. If you are using EBIT, is it the earnings after interest or before interest? It is attributable to both equity holders as well as to the debt holders. So here you divide it by KO. If I take earnings after tax, it is attributable to whom, friends? Equity shareholders. Since it's attributable to equity shareholders, here we divide it by what? So this is basically a perpetuity formula. Okay. Even the Gordon's model, that is P0 is equal to D1 divided by KE minus G, is also a Gordon's or a perpetuity formula. If I get time, my objective is to work out the problems. I'll give you one concept in which you will understand this, and with that one concept, you can learn the logic of KE, KD, KP, everything. Because ultimately, everything is nothing but a part of one overall formula. But first, let me focus on the problems and complete the problems that I have planned for today. Everybody clear, friends? Okay, yes. So, for time being, you understand that we divide by KE because it is a perpetuity formula. Now, tell me, here they have given you EBIT, but they have given you the KE. So if I want to find out the value of equity, should I use EBIT or should I use EAT? I should use EAT. So I need to find out the EAT. Am I right? Down they have given you two companies. What is the first company's name? A Limited. A Limited is what, levered or unlevered? Levered means what? You have equity also, you have debt also. Unlevered company means what? Only equity. So when here it comes, you are having 1,50,000. On that, how much is the interest you are having? So how much interest will come over here? 15,000 interest will come. Will that interest come in case of unlevered company? No. So from this, can I find out the income statement for A and B? Write down in your books working note number 2. Working note number 2, income statement. Working note number 2 will be your income statement. Income statement. So here I will write down particulars. Particulars, you are having A and then you are having B. Point number A is going to be EBIT. Okay. Now tell me, how much is the EBIT you get for both the cases? 45,000, 45,000. From this, what will I reduce now? Interest. I think in case of A, it will be 15,000, B, it will be 0. Earnings before tax will become 30,000 and here it will remain at 45,000. Have they given anything about taxes over here? No. No taxes. I'll put the tax as 0. So once you put the tax as 0, what will be your EAT over here? Will you get the answer as 30,000 over here and 45,000 over here? They have given you the KE. How much is the KE they have offered? 12.5 percentage. Okay. From this, can I go and find out my value of equity? What will be the formula? E divided by F. That is a perpetuity formula. Two lakh 40,000 for the first one. 3,60,000 for the second one. Now we can also take the debt value. I think that's already given in the question. Debt value is how much for the first one? 1,50,000. Second one is 0. So here you get the value as 3,90,000 and here you get the value as 60. All right, friends, are you all done writing this? So tell me, friends, who's having a better value, levered company or unlevered company? Levered company. Why does levered company have a better value?
Because it consists the
Debt. So
it KO reduces.
KO reduces. Value goes up. Okay, now that's all formula driven. Okay, now we talk to a businessman, we cannot go and tell them, debt increases, value goes up. He will look at you and smile. Okay, I just want to show you the practical side of this in reality. Friends, many gold companies. Okay, tell me which is your favorite gold company here. 1 minute. What is the name? GR Gold, is it? GR, okay, J, not J, G. GR, GRT, is it? Okay. Friends, normally, I'm not sure what GRT does, but all the gold companies that I have been researching and consulting, what these companies do is they normally take investments from public. Now they will open, let us say, showroom number A, showroom number B, etc. To open a showroom, they need an investment of around 5 crore. All right. Now, if GRT is a very good brand here, people already know about GRT. They go to GRT because of the trust. Now, let us assume there is no GRT showroom in Nungambakam. They want to open a new showroom. The owner of GRT has got a very good brand. He will tell the investors, you come and invest 5 crore. I will give you committed 12% interest on this. Okay. Normally, gold companies, they get an ROI of around 40%. Because once they invest money, they will sell the gold. Rotation, they have making charges. 18 karat gold, 22 karat gold, different types of golds are there. They'll charge 8%, 18%, 20%. Diamonds, they go up to 40, 50% making charges, very high. Okay. So overall, they get an ROI of how much percentage? So 5 crore, they will take as loan. They will invest in that showroom in Nungambakam. On that, they have to pay interest of how much to these people? That is around how many lakhs? 60 lakhs. But they are going to make a profit of how much over here? How much is 5 crore into 40%? They make 2 crore. They pay them how much? 60 lakh. What is the net profit over here? 1.40 crore per showroom. Did they put any money? They do this. And they are able to play around like this because they have a financial leverage. Do you think they can play this game with their own money? There will always be a limitation. Like this, they can open 100 showrooms. Every showroom they open, 1.4 crore extra profit they make only because of the brand name that they have created. This is what they call it as financial leverage. But let us assume GRT's ROI is not 40%. GRT's ROI is turning out to be only 8%. Now, if they take interest rate or loan at 12%, will they be able to survive? Gone. So, normal cases, we have a hope that ROI has to be always more than the interest. In that cases, only what happened? Leveraging will help you. That's why we work out this financial leverage. What is the formula for financial leverage? EBIT should be more than interest. Only then EBIT by EBT will give you 1 point something as a number. If it is lower than 1 means you are in trouble. Everybody clear now? Okay. So now in this question also, you are getting a better value for which company? Levered company. So now what they are trying to calculate over here is that they are telling you, if you move from a levered company to an unlevered company, you have a levered company and you are moving into an unlevered company, you can get an arbitrage advantage because already you are getting a higher value in which company? Levered company. So now suppose in this question, I think they have asked you that this fellow is holding how much percent shares in the levered company? 20% share. So now if you sell in the levered, sell here and buy here, you will make some extra profit because you're getting an extra value in which company? Levered company. So everyone interact with me. As of now, what is the value of this levered company that you found out over here? Okay, so of 3,90,000, you are going to sell how much percentage, friends? 20%. So how much is 3,90,000 into 20%? Oh, no. 3,90,000 is the total value, right? Only equity value. How much is the equity value is what you're selling? 2,40,000 into how much percentage? How much cash do you receive over here? You got 48,000 rupees. This you are going to go and invest over here. But in order to keep it constant, here I will also borrow 20% of the total debt value. What is the total debt value that you are having? Of that 1,50,000, how much is 20%? So you borrow another 30,000. Okay. This also you take it over here. So now tell me, when you add up 48,000 and 70,000, total how much are you going to invest in the unlevered company? You will invest 78,000 rupees over here on this in the unlevered company. How much is the KE that they have told you already? Did you get the answer as 12.5%? Tell me what is 78,000 into 12.5%? You get 9,750 rupees. This money you get over there. Okay. Minus you have to pay interest now. So you have borrowed how much? 30,000. On 30,000, how much interest you will have to pay? Again, 10%. So you're getting a 2.5% leverage effect over there. How much is that turning out to be? You end up paying 3,000 of interest over here, correct? Now tell me, if you reduce this, how much is the amount that you get over here? Okay, so that is the net income that you get over here is actually 6,750. Had I put this money here itself, on this 48,000, I was getting 12.5 percentage. How much is 12.5 percentage on 48,000? I was getting 6,000. Now I have got how much? 6,750. What is the profit I have made over here? I made a clean profit of 750 just by drawing money from the levered company and investing the money in the unlevered company. Can you draw this chart in your books now? Online students, I believe you are all clear with this. Shilpa, what exactly is happening here is levered company already you have a higher value. So that higher value is at which you are selling. So you get more cash over there. This is what you're going and investing in an unlevered company. So there, even though you're investing in an unlevered company, you're getting 12.5% return. Minus for interest, you're paying only how much? 10 percentage. So by default, what happens? You get a 2%, 2.5% gap coming in between. That becomes your advantage. You can just cross check in a different way if you want. This is actually nothing but, friends, how much is the amount you have borrowed over here? 30,000, correct? On this 30,000, 12.5% return I am getting. Minus 10% interest I am paying. So what is 30,000 into 2.5%? Just check it. It will be the same 750. All right, friends. Are you all done with this? Okay, fine. So, friends, I believe we are done with levered. We are done with unlevered also. Okay, now this is something what you have to write down neatly in your books. That part I will just show you. You quickly write it down and we go to the next question. Are you all tired, friends? Will we take a I think I started a little late, so I went on without a break. Now it is, I think, 12:30. Wait. You're doing which question? Question number 3, right? Yes, here. I think we got the first part. Can you just quickly write down this in your books now? This is a proper way of writing from an examination point of view. All right, friends. Are you all done? Writing, please write down. Exam, you should write down the step manner, but the chart will help you to understand how you take from here, sell it and give it there. So you make the advantage. Okay. We'll do one more final question and then we'll take a lunch break. Is that okay? Yeah. I think we have one more question left in the RTP. We have 3 more questions left in total. The dangerous question, if you exclude that, one more question is left, which is, easily doable. Okay. Those 2 we'll do in the end after we finish everything else, and we'll do it a fresh mind at that time. Okay. Okay, friends. Can I go to the next part now? Okay. Now we have to do a question on cost of capital. Okay. Now, everyone write down working note number 1, basic data. Working note number 1, basic data. Okay. Ready, friends? Shall we start? Okay. Now, first we'll copy down the numbers and then we will go and analyze the numbers. Okay. So here they have given you a table. You don't need to copy down a table as far as the exam is concerned. Just interact with me. 12% debenture. What is the value that is told for 12% debenture? 4 lakh 50. 10% preference share, 1 lakh 50. Equity share capital, 24 lakhs. Now they have told the company's share has a current market price of how much, friends? 30.25. Write down in your books point number A, current market price, 30.25. Okay. Next, they have told expected dividend. Friends, what do you mean by the word expected dividend? D0 or D1? D1. D1 is turning out to be how much percentage of 2023? 50%. So, friends, 2023 down, they have given you the number. How much is the number they have told you over here? 3.023. Of that, how much it is going to be? 50%. So, write down point number B. D1 is equal to 50% of 3.023. 50% of 3.023. How much is that turning out to be? Can you tell me? 511. Okay. Then they have told EPS of the last 10 years is given. Can you tell me why have they given the EPS for the last 10 years? Growth rate. So friends, here actually you can take the growth in two methods. One, you can take from 2014 to 2023. Method 1. Method 2, what you have RTP has done is they have only taken 22 to 23. So we can give you our assumptions in the examination hall also. So write down the next point, growth. Write down the next point, growth. So what will be the formula for growth, friends? 3.023 minus 723. That will give you an increment from a base of what? 2.723. Around, can I say approximately 11%? Everyone got 11%. In bracket, you write down a note. Alternatively, we can calculate the long-term growth rate. Alternatively, we can calculate the long-term growth rate. We can calculate the long-term growth rate by taking 2014 as the base. Long-term growth rate by taking what? 2014 as the base. 14 as the base. Everybody clear with this part now? Okay. Can I go to the next one? Okay. Now they have told company can issue debentures at a rate of how much percentage, friends? 14%. So just write down the next point. Next point. 14% debenture has a market price of 99. They have given that also. We'll write down in one shot. 14% debenture. 14% debenture has a market price of how much? 99. Has a market price of 99. Next one. They are also issuing 12% new preference share. Am I right? This new preference share is having a price of how much? 9.9. So write down the next point. MPS of market price of 12% preference share. Market price of 12% preference share. Everyone tell me how much is that turning out to be? 9.9. 9.9. And they are paying a dividend of how much rupees per share? 1.25. So write down the next point, preference dividend. Preference dividend 1.25. Last, they are telling you the marginal tax rate. Marginal tax rate. Tell me, friends, what is the marginal tax rate that you get over here? 50%. So we are done with the basic data. Now I'll give you 1 minute time. Read through the basic data, understand the basic data, after which we will solve it in analysis one by one. Come on. If you want, you can do combined study with your neighbor. Find out hidden information yourself. Dig out hidden information yourself. Come on. Shall we discuss and do it together now? Okay. Friends, one by one. First, they have given you a table. From that table, what are the hidden information you can find out now? Can you tell me? One, EPS. How did you find out EPS? Wait, no. Can we find out the... Okay, they have given the share capital is given and the number of shares is given. I think from that you can find out the face value, if I'm not wrong. Am I right? Because these are all given at cost. Okay, face value is one thing. Can we find out the weights of each of these things? Like if the total is how much? 30 lakhs is the total. Am I right? And here you will get 100%. So what will be the weight of debenture based on this? Can you tell me? Do you get the answer as 15%? 5%. So the last one will be, so write down working note number 2, analysis. Weights based on cost. Can you please put these numbers and find out the weights yourself? All right, friends. Tell me, did you get the answer? What is the answer you get over there now? Do you get 15, 5 and 80 percentage? Perfect. So we are done with part 1. Let me go to the second one now. Now, friends, they have given you market price as 30.25. Okay. Growth is 11 percentage. D1 also we got it as 1.5 something. From that, can we find out what can we find out? KE. Using which model are we going to find out KE now? Gordon's model. So you can write down Roman number 2. Roman number 2. KE using what model? Gordon's model. KE using Gordon's model. Okay. So what is the formula? P0 is equal to D1 divided by KE minus G. D1 divided by KE minus G. So P1 is equal to how much? P0 is equal to how much, friends? How much did you get here? 30.25 is equal to D1 was how much? 1.5115 divided by KE minus how much percent is your growth rate? 11% is going to be your growth rate. Okay. From this, can you do a reverse working and find out KE on your own now? Okay, so you get the answer as 16 percentage. All right. Once you're done with this, next thing, can I go to the next part now? Okay. Next one, let me go down over here. They have told that debentures are currently selling at what price? 99 rupees, and we have got an interest rate of how much percentage? 14%. From this, can I find out KD now? What will be the formula for KD over here? Interest into 1 minus tax divided by the current market price. It's again a formula for perpetuity. Okay. So how much is the interest that you have over here? 14 into 1 minus 50% divided by 99 will give you your KD. 7.07, is it? So you will get the answer as 7.07 percentage. 7.07 percentage. Everybody clear with this part? Okay. Now, once you get this answer, can I go to the next one? Wait, I think you're still writing. Let everyone finish writing. Perfect. Okay. So once you're done with this, I'll go to the next page. We can now find out KP in the same way. Am I right? Next Roman number will be Roman number 3. We will go and find out KP. KP also they have given you the market price over there. How much is the market price for KP? 9.9. It is 12%. And for that, they have given the preference dividend as how much over here? 1.25. So KP will be equal to whatever is the preference dividend divided by the current market price. So 1.25 divided by 9.90. 1.25 divided by 9.90. Do you get the answer as 12.63 percentage? Fantastic. Once you get these three, can I go and find out my WACC? Roman number 4 will be WACC. What is the formula for WACC? KE into weight of equity plus KP into weight of preference plus KD into weight of debt. So it will be 16 into 0.8 plus 12.63 into 0.05 plus 7.07 into 0.15. Okay. Can I go to the next part now? Are you all done writing this? Okay. So friends, once you get 14.49 as the answer for the first one, let us go and read the second requirement now. Okay. Calculate the after tax of KD, KP and also WACC. Marginal cost of capital for the new fundraise. We already got this. Now we have third requirement. Listen, how much can we spend for capital investment before new ordinary shares must be sold? Marginal cost of capital remains to be constant. Assume retained earnings available for the next year's investment is 50% of 2023 earnings. Friends, interact with me now. How much is the retained earnings available with us over here? I just write down, I'll take a fresh page. Retained earnings is going to be 50% of the earnings of 2023. Am I right? How much is the earnings of 2023? 3.023. So I will do 3.023 into how much percentage? Into 50 percentage into, you have how many lakh shares over here? 2 lakh shares. So can you tell me what is the retained earnings that you get over here? 3 lakh?
2,300.
Okay, do you get the answer as 3 lakh 2,300? Now everyone tell me, how much is the weight of equity, how much is the weight of debt and how much is the weight of preference shares? 80% is the weight of equity. How much is the weight of preference shares? 5%. What about in case of debt? You get 15%. Everybody clear with this part? This equity has increased by 3 lakh 2,300. Therefore, if you want to maintain the same ratio of 85 and 15, my overall increase has to be 3 lakh 2,300 divided by how much percentage? 80 percentage. So what is 3 lakh 2,300 divided by 80 percentage? Everybody got 3 lakh 77,875. Of that, how much is 5 percentage? 18,000.
894.
And what about the debt value? 56,681. This is going to be the additional preference and debenture to be issued. Can you write down this in your books now? Right. All right, friends. Are you all done writing this in your books? Fine. So we are done with this part also. Can we go to the final requirement now? Last requirement. What will be the marginal cost of capital or cost of fundraise in excess amount if the company can sell ordinary shares of 22 rupees per share? So now suddenly what has happened? Earlier, what was the market price that they gave over there? 30.25. Now, what is the new market price they have given? The moment this 22 comes in, your KE will change. If your KE changes, your WACC will also change. So, write down the next Roman number, revised KE. Write down the next one, revised KE. So the formula will be 22 rupees is equal to D1 was 1.115 divided by some KE minus 11%. All right, friends. Everybody done writing this? Fantastic. So once you get a revised KE, can I find out a revised WACC now? 17.87 into 0.8 plus other two will remain the same. How much was the preference share? I think you got 12.63 into 0.05 plus last one was 7.07 into 0.15.
8.980.
Approximately, do you get the answer as 16%? All right, friends. Are you all done writing this? Okay. So, friends, we are done with the major questions of RTP except for two dangerous questions on working capital management. Let's cover all the other questions so that we also build confidence and then we'll go to the advanced level. One more thing, friends, exam point of view also, you should do it exactly the same manner. Easy to tough. Never start with a tough question. If you start with a tough question, it's a very big emotional game. See, it's something similar to cricket. If in IPL, first over, one wicket goes down, confidence completely gone. Then the second player will come, even if he's very good, that confidence factor makes a big impact. Exam hall also, first question has a lot of confidence level that actually decides. Friends, when I wrote my FM exam, me and my friend, we both prepared together. He was much better than me. But exam hall, answers went topsy-turvy only because of one wrong decision. He started with an atom bomb question. A 16-mark question came in the exam. I started with a 4-mark question. Alright. So when I started with I in fact started with theory. Being honest, I started with theory because theory you cannot go wrong. If you know what is this, you will write down like that only. So 20 marks of theory was there and then 4-mark questions was there. By the time it was 2:30, I completed 20 marks of theory. Plus, I did one 4-mark question. So now look, think of my emotional mindset. 20-mark theory, I have written correctly. I will at least get 15 marks. One 4-mark problem question, I have done it correct. So I've got 19 marks in the first 30 to 40 minutes of time. Okay. Now I have a 2.5 hours remaining for the examination. I have already scored 20 marks. What is the pass mark? I need only extra how many marks now? 20 marks to pass. 2.5 hours is there. Relax and write. That fellow started with a 16-mark question at 2 o'clock. 2:45, he realized answer is wrong. Now think of the mindset, oh my god, 45 minutes are over. I did not even get one question correct. There is a tension, he will start doing others fast, and ultimately crumble down. In fact, friends, you have to understand one thing. When you have long questions, you will have multiple working notes. Even though the final answer is wrong, you get marks for every working note in between. Are you getting my point? So don't get panicked like that and start with easy problems. One more advice from my experience of your MCQ, RTP, etc. Don't start with MCQs. It's a new area. Okay, let's go and try. Okay, the problem with trying is that suddenly you know to get an answer, you check the 4 options. The answer is not there in the 4 options, so heart will start beating. Start with things that you already know, things that you have already done. Then you come back to the MCQ and work it out towards the end will be a much better strategy from an examination point of view. Okay. So friends, whatever we did in the morning, was it comfortable to all of you?
Yes,
Shall we take a break now? We'll take a 1 hour break. We'll get now the time is I think 12:45, 12:50, right? 12:45. We'll take a 1 hour break. We'll get back at 1:45. No, don't make it clear. 1:45 and we are only for 1 day. Okay. Then we'll do MTP. Series 1 we will do. And in the last session will be from 4 to 6. That session we will do those 2 beautiful questions and we'll pack up our session. Alright friends. So I'll see you after 1 hour. Thank you so much.
thank you.
See you after 1 hour. Online students, I believe you are all comfortable. Yeah. See you. See you after the break. Thank you.